RSI is the most popular indicator on TradingView. We ran it on 485 Nasdaq stocks, 2,897 trades in total. Win rate, 75.8% across 2,897 trades. But the win rate is not the interesting part. Before we show you the aggregate numbers, we want you to watch something. Here is what RSI did on the most popular Nasdaq ETF. QQQ, the Nasdaq 100 ETF. Here is how RSI 14 traded it over 5 years. Each green arrow is a buy signal. Each red arrow is a sell. 4 trades total. Watch what happens at the buy signals. RSI drops below 30, the stock is falling fast. RSI says, oversold, buy, but QQQ keeps falling. Oversold got more oversold. That is the structural problem with a mean reversion tool on a trending asset. QQQ does not mean revert. It trends, and when it eventually bounces, RSI exits at 70 and misses the rest of the run. $10,000. Both strategies, same starting date. Green is the RSI strategy. Gold is buy and hold. Watch what happens every time RSI fires a buy signal into a falling market. The strategy enters. The stock keeps falling. When RSI eventually sells at 70, buy and hold has already captured the whole move. By the end of 2024, RSI returned 27.0%. Buy and hold returned 138.8%. A gap of 111.8 percentage points. That is not noise. That is RSI failing on a trending asset. Now here is where it gets interesting. What you just saw on QQQ is not a broken indicator. It is the right indicator on the wrong kind of asset. Here is why. RSI stands for Relative Strength Index. But here is what the name does not tell you. It does not measure whether a stock is strong or weak. It measures how fast the stock is moving. Think of it as a speedometer, not a GPS. The calculation, take the last 14 days of price changes. Average the up days. Average the down days. Divide one by the other. That ratio, compressed into a 0 to 100 scale, is RSI. Below 30 means the stock has been falling fast. That is the buy signal. Above 70 means it has been rising fast. That is the exit. Simple rule, no discretion. We ran it on every Nasdaq stock and collected every data point. Before the results, the caveat you almost never hear. These are the 485 Nasdaq stocks still trading today. Companies that went bankrupt or were delisted are not in this dataset. That survivorship bias slightly inflates everything you are about to see. We downloaded 6 years of daily prices, January 2020 to December 2024, applied RSI 14 to every ticker. Upper bound, 70. Lower bound, 30. No commissions, no slippage, no filters, just the raw signal. 2,897 trades. Here is what we found. Win rate, 75.8% across 2,897 trades. If that was the whole story, you would stop here. But here is what the average hides. Average winning trade, plus 15.8%. Average losing trade, minus 13.22%. Winners are 1.2 times the size of losers. The direction of the edge depends on whether that asymmetry holds. Across all 2,897 signals, the average return per trade was plus 8.79%. But not every stock in this dataset responded the same way. The distribution tells the real story. This is the distribution of all 2,897 trade returns. Look at the left side. Losses cluster tight near zero. The average losing trade was only minus 13.22%. Now look at the right tail. The single best trade in this data set returned 113%. Subscribe to Backtest Lab. We test a new strategy every single week. The shape of this distribution determines everything, and that shape looks very different depending on which sector you are in. Here are the 5 biggest winners. Bloom Energy, BE first, up 784%. Teva Pharmaceutical Industries Limited American Depository Shares, TEVA second, up 393%. Synopsys, SNPS third, up 380%. Cameco, CCJ fourth, up 366%. Celestica, CLS fifth, up 358%. Look at that list carefully. These are not the names you would typically call boring or range-bound. High volatility, big swings, creates enough distance between 30 and 70 for RSI to capture a meaningful move. But the common thread runs deeper than individual stocks. It runs through sectors, and the sector breakdown changes everything. Here is the insight that changes how you should use RSI. We broke all the trades down by sector. Healthcare led with the highest win rate, 80.3%. Utilities came second at 80.2%. At the bottom, consumer staples, only 68.0% win rate and plus 4.34% average return per trade. By average return per trade, technology led at plus 12.22% per signal. The pattern is clear. RSI rewards sectors that oscillate, sectors with mean reverting price behavior. It destroys value in sectors that trend directionally. Filter your stock universe by sector before applying RSI. Subscribe to get the sector filter code. Now, the verdict. Bottom line. RSI has a real mathematical structure, 75.8% win rate plus 8.79% average per trade across 2,897 signals. But the edge is conditional on the market regime. It works on oscillating, range-bound stocks in mean-reverting sectors. It fails, badly, on trending names, broad ETF tickets, and momentum sectors. 2 adjustments before you use this in the real world. First, subtract commissions and slippage. In live trading, every trade costs you. Subtract 5 to 10% from every return. Second, survivorship bias. Stocks that went to zero between 2020 and 2024 are not in this dataset. The real win rate is slightly lower. With those adjustments, the conditional edge still exists. Use RSI on the right sectors, with the right volatility regime and proper risk management. Use it on QQQ, and you are using a speedometer to navigate. Subscribe, like, and leave a comment. Full ticker results and the Backtest script are on Patreon, link in the description.